Hi all, and welcome to another edition of our weekly market outlook report for the week starting Monday the 21st of September. We have a quieter week ahead of us, which starts with a slow economic calendar on Monday. On Tuesday, we should be on the lookout for Eurozone consumer confidence. Also, Bank of England Governor Bailey is due to speak. Fed's Chair Powell is scheduled to start his 3-day testimony in front of the Senate. Going forward, UK, Eurozone and also US manufacturing and services PMI figures will be closely watched on Wednesday. On Thursday, the main point of interest is reserved for US jobless claims data, and the week will finish on Friday with US durable goods figures. Now, let's take a look at a few markets. This is euro dollar in 4 hourly, so therefore intraday price action. You can see that euro dollar is ranging sideways. Key trading level going forward is at 1.1840, which is this orange line here. Support to the downside is at the cluster of these lows and this orange line, which is our 200 period moving average at 117.60. So as long as that level holds, so pull back to that level and a rally or a gradual move higher from the current levels and a breakout above resistance area at 1.1920, that could open the way for a push higher targeting 1.20, which is the based on this previous September high. Breakout above that level could open the way for additional push higher targeting 1.21, 1.2170, 1.22. Alternatively, if we see a dip lower and an end of day close below 1.1760, then all of this could become a very nasty looking double top for a left shoulder, then this double head here for a head perhaps, and maybe a complex development of a right shoulder. So shoulder, head and shoulder with a neckline here. Loss of that level could appear to be triggering some bearish reversal targeting additional downside support towards 1.17, 1.1640, 1.16, possibly even 1.15 to the downside. Cable unfortunately appears to be quite bearish. Key trading level going forward is at 1.30, nice and round number. Yet again, this is the 4 hourly time frame. We have a cluster of these previous lows, so if I do that, that would bring us a horizontal level towards 1.30. If I do this, connecting this slightly higher sequence of lows, that will bring us to 1.3115. Either way, key trading level 1.30 as an initial resistance. These type of patterns, they tend to break to the downside if they're seen in a clearly defined downtrend. So basically a loss of 1.28 would open the way for a deeper corrective move lower, further selling pressure, possibly triggered some further complications with Brexit negotiations, targeting supports at 1.27, 1.2620, possibly even 1.25, 24.40. Alternatively, if you see a push higher and a breakout above 1.30, that could open the way for an additional move higher and retest of a resistance at 1.3150. Only a breakout above that level and end of day close above that level could trigger an extension to the upside targeting 1.33, possibly 1.34, 34.30 to the upside. Dollar Japanese yen appears to be very, very bearish. Basically delayed reaction to Fed's. We can see high, lower high, lower high, lower high, lower high, lower. Fairly decent falling resistance trend line. Key trading level going forward is at 105.50. The price is currently testing these current swing lows from July time, so either a rally into 105, 105.50 and a rejection from there could likely be seen to be bearish, basically continuation of this selling pressure, potentially opening the way for a deeper corrective pullback towards 104. Some longer term analysts are looking at possibly even 102 based on monthly and weekly timeframes. Alternatively, if you see a push higher and an end of day breakout above 105.84, which would be this falling resistance trend line, that would negate the bearish trend, potentially triggering a short squeeze to the upside, targeting resistance at 106.11, 106.40, 106.70, possibly even 107.30 to the upside.